Hey, what's up, everybody? If you can hear me, drop a chat in the drop a message in the chat. Hey, Chris, how's it going? So I'm just waiting on a couple people to hop on, and then we'll go ahead and get started. If everybody can hear me, like I said, I think Chris, you can hear me, but I'm gonna go ahead and get my camera turned on in a second. I'm just wrapping up one thing really quickly. I've been good. I've been good. So just staying busy with a lot of life stuff, a lot of trading stuff, a lot of family stuff. So just nothing too crazy. How about you? Are you how's everything going with you? See if I can get my camera started up. Okay, cool. So what this mentorship should really be intended for is just something again that can live on YouTube. It's gonna be more forex driven. Depending on how this goes, I might make this just a regular thing where I just kind of put things on um, on YouTube and just do the mentorships publicly. But it really just kind of depends on how many people hop on and how many people actually kind of make this a thing. So I'm gonna pin this. So we'll see. And then obviously, like um, the mentorship, the private mentorship students, you guys still always have access to me as usual. But waiting to hear next time, man. Do you know where you're gonna go to, or is it kind of up in the air still, Chris? Gotcha. Okay. Well, I mean, hopefully everything works out for you, man. And you get a good location. Um, in the meantime, what I'm gonna do, I'm gonna take these off because I don't think anybody will be able to hop on and hear me. So what I want to do is really just kind of get started with the mentorship today. And again, this is going to be like a very high level review, or not review, but just basics of this space. This is going to be primarily driven around forex and just kind of the same strategies, obviously, Chris, that you've learned with me over the past couple of years. Um, but then just really how we apply it to forex markets. If there's a lot of engagement, this is going to be again open to the public, so it's kind of the first time I'm doing this. So if there's a lot of people that hop on, maybe I'll think about doing the other one and kind of talking more about the indices. But either way, they're both really good markets to trade. Um, I think indices have gotten a lot more publicity over the past couple of years, just because there's been a lot of transition to people trading the futures side of things. So um, it's cool. But let me go ahead and share my screen and see if we can go ahead and get into this. And today's class is just going to be a review, but everything again is going to live live on YouTube, or it's going to live under the live section of YouTube. I'll probably rename this like Mentorship Class 1 or something like that, and it'll just be a weekly thing. It'll probably be. I don't see us being on here for more than an hour. I think next week we'll really start to dive more into chart stuff, um, with just us talking more about probably Power of Three, and I'm gonna structure things a little bit differently than I have in the other classes. I think understanding Power 3 and Forex um, is going to be really beneficial for kind of how I see the markets. So, but yeah, I want to use this as, I guess, then the main reason that I wanted to do this is really just because I've had a lot of people just hit me up about mentorships, and I wanted to give people something that they could use to really kind of take this and turn this into a model where they could trade and really just feel like I was giving back. I think a lot of people could benefit from this. Um, Tony, hey Tony, how's it going? Appreciate your time this afternoon. Yep, hopefully everybody enjoys this. So today's lesson is really just going to be a very, I don't know where everybody's at in their trading journey, and I don't know if people have traded forex before or traded, other markets too. And so what I wanted to do was really just kind of have a very top line level, like if you've never seen this market before, like this is where you start. And so this class today might seem um, very basic, and that's okay. Just know that more stuff is coming next week where it'll be a lot more in depth. So, and there's not really an end date for this mentorship. Again, like I said before, this is going to be something that's going to be ongoing. I see it probably running through the end of the year, maybe more going into early next year. Um, but it's just a weekly, spaced out, takes some time, develop it. And if you're already ahead of this, is mentorship wise, like my private mentorship students, you guys have seen this stuff already. It's or some of the stuff at least already. Then it's okay. We'll get some more advanced stuff, but I gotta lay the foundations first. So let's see what we can talk about today. Boom, 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 boom. Let me see if this shares over. And the deck that I'm using is actually an old Forex. I taught a class a couple of years ago with a friend, and I just used some of these slides over again. But again, basic information, same stuff. It's not really strategy driven stuff yet. Um, boom, boom, boom. Let me see this. So this stuff's a little outdated as far as like the numbers and things, but if you guys have been following in the chat, you kind of know me already. So what I want to do is just kick off with a meet your instructor. So who am I? Who is Brinks Trades, right? So just really quickly about me. This is a deck taken from 2022. So it's a little bit, things have changed a lot since then. But I've been day trading since 2014. It'll be 10 years coming up. Technically 10 years in December, but officially the first time I went live, I think it was March of 2015. So it's coming up on 10 years. If you know about me, you know that I trade obviously a combination of the futures and currency markets, whether that be NASDAQ, on the indices side mainly, and then on the currency side, really Euro futures, Euro USD, GBP USD. And then when first, before I made the transitions to futures, I was really trading a lot of GBP USD or GBP JPY. Just outside of this, man, I'm a Michigan State grad. It's not really hard to find out who I am. And I do marketing in my actual day job outside of this. So I teach people how to trade. Um, and again, everything here is education advice. It's not investment advice. But I teach people how to trade based off of the things that I do. Um, and uh, and things that I've learned over the course of my 10-year journey in the markets. And so it's been really crazy. Up until, man, I'm trying to think, like this year, past $1 million in challenges in Apex alone. Have been building a personal account from a $10,000 account to where it sits currently at about $31,000, I think, currently. So that's a side project that I've been doing in addition to the funded stuff. But yeah, I just want to pass on the knowledge. So this is old stuff. These are old executions that I've had. Again, just showing off some trades. But again, if you guys are following in the chat, you guys can see me do the stuff on the regular. But I think some of this stuff was a combination of personal account trades. I think the second one was a funded account trade from way back in the day. And then in 2021, I turned a 20 something $1,000 account into $50,000 in like 2 months. Um, and again, that was probably a little bit more risk than I employ now, but I've learned to I would rather have more days trading where I'm just bringing in a consistent smaller amount than try to shoot for big trades all the time. So if you look back in the chat, if you look back at my old stuff, I have a lot of big one-off trades where they were just huge numbers on like smaller days, on smaller accounts. But now I just want to grow as much capital as possible and have consistent smaller days, right? And treat that more like, I don't know, like the money you'd see from a job where it's smaller but consistent, right? So, um, let's see. Again, some funded accounts. This is more Forex funded accounts. The state of the Forex industry, again, this is a couple of years old. So the Forex industry has changed a lot when it comes to the actual prop firm space, going through a lot of transition. I actually don't think any of these firms are still up and running, but at one time on the Forex side, I was managing over 700,000 in funded capital. And so I'm not necessarily working with those firms anymore. Again, I've transitioned more to futures like Apex, like my funded futures. Um, but again, I tell everybody, don't account on those things being there for a long time. Use them to grow your own personal account. So again, like I said, mentioned before, this is going to be Forex driven mentorship. And before we proceed, I just want to let a couple things out. So Forex is not gambling. It's not without risk, right? It doesn't matter who teaches you anything. If they're teaching you that stuff is guaranteed, like price is 100% going to go in the direction you're calling out, or you're never going to lose a trade, or they know 100% where the market's going to go, they're lying to you, and don't pay them anything because they're lying. Like, you will not win every trade. And on top of that, your goal is not to hit a home run every trade, right? It's base hits, right? And so I take this idea of basketball shooting percentages, right? And kind of applying that to trading, right? So if you win 40 to 50% of your trades, you can still be a profitable trader, right? Even me, my personal kind of like trading, when I'm trading for once a week, a good setup, I'm usually shooting in the 66 to 68% range, right? So that's still far from, it's really good, but it's far from 100%, right? So I'm losing 30%. So if I'm not managing my mental on those 30%, then I could still blow my account, right? I could still do damage to my account on those losing trades. And so really, what I want to do for this mentorship is really just give you guys a good understanding of the Forex market, provide you with solid strategy, and generate trade ideas, entries, exits, risk management. And then I'm not going to touch on prop firms. So that's old. But I want everybody to walk away with at least one trading model that they can use for this. I'm going to talk about at least one, but I'm not going to go into the depth of everything. Again, this is a free mentorship for you too, so I'm going to keep things a little bit close to the chest for some of the other stuff. And mentorship students will probably get paid. Mentorship students will probably get more access to that stuff. So what is Forex, right? So let's kind of dive into this. Again, this is high level stuff, right? So what is Forex? Forex is going to be short for foreign exchange. You may hear it referred to as the currency market. It's one of many markets to trade, right? So when you think about securities like stocks, you have futures market, which is more what I trade now. You have crypto, you have other markets as well. So Forex is going to be the most liquid market in the world, meaning that the most money runs through it. More money runs through that market than any other market. And so it's about $6.6 trillion a day, as opposed to the New York Stock Exchange, which makes about $20 billion a day. It's, again, the most liquid market in the world. Most liquid does not always mean the best market to trade. And that's going to really rotate, based on like current market trends, seasonality, that type of thing. So, but as far as money goes, there's the most money that flows through this, right? And basically, what is Forex? When it comes to Forex, traders can profit whether a specific currency is increasing or decreasing in value. The cool thing about Forex, and obviously the futures market has this too, but it doesn't require a huge investment, right? If you want to trade stocks, I think there's a day trading pattern rule where you need like 25,000 to begin. With Forex, you can trade as little as $100. High liquidity basically allows for a large lot of amounts of leverage. I've seen leverages up to 1 to 1,000 on independent out non-US brokers. If you live in the US, the broker um, liquidity, or sorry, the leverage is going to be 1 to 50. So it's a little bit smaller, but to be completely honest, I risk on personal accounts 1 to 2% max per trade. Which is going to be a little bit, obviously it's going to be a little bit higher if you're starting with a little smaller capital, but um, it's that 1 to 50 leverage is enough. Leverage is a double-edged sword. It can give you a lot for a little, or it can take a lot, you know, from you. So, and really the goal with Forex is really just to buy a currency that's anticipated to gain value, or sell a currency that's anticipated to lose value against another currency. When it comes to what people trade, um, people are going to mostly trade the majors, or the currencies that are known as the majors, right? So this term is really going to refer to the most traded currencies in the world, right? So when we talk about euro, United States dollar, Japanese yen, the Great British pound, Australian dollar, and the Swiss franc are going to be the 6 majorly traded currencies in the world. Um, And so when we talk about the highest, the biggest, most traded currency pairs, these are going to be the top 6 or 7. So US Euro USD, GBP USD, USD JPY, USD CHF, USD CAD, excuse me, AUD USD, and NZD USD. So there's a lot of minor currency pairs, or what's known as like the minors, or you might call them the mixes. Um, and they're basically any other combination of these, or any other currency that you can think of kind of mixed in with these. But all the major currency pairs have US dollar attached to them, and those are going to be the major ones. Um, and then if you guys have comments or questions, feel free to drop them in the chat as well. But the major Forex sessions, so Forex is going to be the 24/5 market, meaning that it's open 24 hours a day, 5 days a week. It opens up Sunday at 5 p.m. Eastern Standard Time and closes at Friday at 5 p.m. Eastern Standard Time. So the market's open around the clock. It's going to be divided into 3 major bank sessions. And this is going to be really crucial to know, because when we start talking about strategy, everything is going to revolve around 3 sessions, and how the market kind of sees these things and how they're divided up. It's going to be 3 major sessions. So the London session, right, is going to be 3 a.m. Eastern Standard Time to 12 p.m. Eastern Standard Time. The New York session is going to be 8 a.m. Eastern Standard Time to 5 p.m. Eastern Standard Time. And the Tokyo session, you also might hear it referred to as the Asian session. It's going to be 7 p.m. Eastern Standard Time to 4 a.m. Eastern Standard Time. And the most volatile sessions are really when these are going to be overlapping. So if you look at the time windows, usually there's like a 3 to 4 hour window for each of these sessions where they overlap. For instance, the London New York session overlap is going to be from 8 a.m. to noon. The London session overlap is going to run from London session. London session and the Tokyo session, or the Asia session overlap, is going to run from about that 3 to 4 a.m. And so these are going to be obviously the most volatile times of the day when those overlapping sessions kick in. So if we talk about Forex sessions, again, the London session is one of the major 3. It's actually the second most volatile. Just at a high level, this is going to be the session where 99% of the traders are going to be looking at London, or it's going to really be happening again when the London banks and traders are the most active. And essentially, it's going to be the most volatile time for the European markets. Roughly 30% of all market transactions take place in the London session. The following session, if you're trading London session, and again, we'll talk about strategy, as these classes go on, but during the London session, overlapping with the two other major sessions, a lot of those transactions or a lot of trades are going to happen during that time, because you think about the more traders are on, usually it's the more volatile those sessions are going to be. And so there's a surge in liquidity that happens during that overlapping of the two other sessions. And really that second session overlap with the New York session from that 8 to 12 is going to be a crazy volatile time in the Forex markets usually. When we talk about pairs, right, in the London session, Euro USD is kind of like the standard London session pair, but really anything that is a European pair or a pair that has a European currency in it. So this could be euro, this could be pound, this could be Swiss franc. A lot of these pairs are going to be volatile during this time. Um, let's see. And then one thing to note, and I talk about this all the time, I was actually just working with a student earlier today. Most major movements that occur during the London session also really carry over in the New York session. And we'll talk about that when we talk about Power of Three. Um, but really, most major sessions do have some sort of like transition period where if London is bearish, then New York session might be bearish as well. Or if London is bullish, time of week, but a lot of the time, I'd say about 70% of the time that usually happens. Um, and again, going back to that overlap, the best time to trade these currency pairs are going to be during the overlap in New York session. And it's really gonna the day starts to slow down at the end towards noon when these London sessions or these European session traders are closing out their trades for the day. When we talk about New York session, the session is going to begin at 8 a.m. It's going to run through 5. It's primarily the most traded session amongst all Forex traders, primarily due to the influence that the market has. New York is obviously one of the biggest. United States in general is one of the power players in like any type of financial activity. So it makes sense that there's going to be a lot of traders on during this time. So we talk about most commonly traded pairs. Again, anything with the US dollar is going to be very volatile. So all of those major pairs are going to be usually volatile during this time. When you're trading the New York session, just something to keep in mind out for, and we'll talk about this when it comes to news. Major news is going to be involved at the beginning of the session open. So when we think about that 8:30, 9:30, 10 o'clock time frame at the beginning of the session, you're going to see a lot of news releases happen. And so every major transaction in the world really involves the US dollar. So really any type of news that comes out against the dollar is really going to affect the dollar and affect any currency that's it's trading against. Um, Usually, whether this is the Forex side, the currency future side, the New York session is really going to start to slow down after about 1 p.m. So your market really from that 11 to 12 usually the market slows down, and then by 1 o'clock it's usually dead unless there's a major news release later on that day. And then when we talk about like afternoons, I mean weekends as the market's about to close for the weekend, Asian session and London session traders are usually done going into that time. And so that Friday can be very, very slow. Tokyo session, same thing. We call it Tokyo or Asian session. It's usually referred to as either one of those terms. You might hear Tokyo session a lot because Tokyo is going to be the most it's like the financial capital of Asia. So it's the biggest market and it's the third largest trading center in the world, with the yen having 16.5% of all transactions. So if you're trading Japanese yen, if you're trading the currency, that currency, that's going to be huge amount of transactions. And the yen is pretty volatile as far as forex transactions go. Most commonly traded pair in Tokyo is going to be USD JPY, and the Bank of Japan also interacts just the same way that our bank in the United States and like Jerome Powell has his own kind of like News releases and that Fed share of releases kind of impact the market. They also have something in Japan known as the Bank of Japan, and so this will usually happen a lot during Asian session or that London session crossover. Uh, During this time, the market's usually pretty chill. There's not a whole lot of volatility that goes on. I'd say on a regular basis. Every once in a while, you might see something happen where price just moves out of nowhere. But in this time, if you are going to see volatility, you're going to see it more out of the Asian Pacific pairs because these are the ones that are going to be on and trading during this time. So AUD USD, NAS, New Zealand dollar, and then GBP USD. And then again, same thing with New York session. News releases tend to happen earlier during this time. So when you talk about the major times of volatility, again, you want to look for the session overlaps. Um, I actually don't hold trades over the weekend. I'm not going to skip that part, but paths can usually, because things can reverse or just gap like crazy on weekends. I usually don't hold things over the weekend. Again, once again, if you're looking for the major times of forex volatility, then you want to make sure that you are looking for the session overlap times. And then this is just a chart of those session overlaps. So for instance, if you look at Tokyo and New York, right, they're going to overlap from that 1 to 3. If you're looking at forex, that New York to really 12 session overlap is going to be of that huge volatility session where you're going to see a lot of things go on. So let me stop there and see if there's any questions at all. If you guys have questions, again, feel free to throw them in the chat. This is just a high level review of, like, again, what is forex, right? So I'm going to go through one more section. We're probably going to call it a day, and then next week we'll start talking about actual chart stuff when it comes to Power of Three. This is going to be a huge thing in the way that I look at the markets, and really any market, not just forex, but it's a concept that I want to drill into people as soon as possible, especially when it comes to forex. How to review a currency pair. So really, when it comes to like looking at a chart, the reason that currency is quoted in pairs is because you're basically buying one currency and selling one simultaneously. So when you look at a currency pair, the first listed currency pair within a pair is going to be called the base. The second currency is going to be called the quote. So for instance, if you're looking at Euro USD, Euro is going to be the base, USD is going to be the quote, right? So when it comes to Euro USD, how you read this is essentially, whatever the price is, whatever Euro USD price is that it's currently trading at, then one of the first pair is equal to whatever the current trading price is for the second pair. So for instance, if we open up a chart and we see that Euro USD is trading at 1.08499, then it means that 1 euro is equivalent to 1.08499 USD. So again, same thing, right? This is an example of an old chart from Euro USD. And so if you look at the chart, you can see that it says we're currently trading at 1.08443. That's that green number on the side. So basically what it's saying is that 1 euro is equal to 1.08443 United States dollars. So in theory, the euro is worth more in this case. Yen pairs are a little bit different, right? So yen is going to be the same thing. We'll talk about these in a second. The screenshot's a little cut off, but this is British pound, Japanese yen. So what we're saying is that 1 British pound is equivalent to 166.57 yen. So one of the first pair is equal to whatever the number you're seeing on the second pair. What are pips and how do you count them, right? So pip is just an acronym, right? And so it stands for percentage in point or price interest point. A pip is basically the smallest price move on an exchange rate that can make a forex, that can make that an exchange rate can make based on a forex market convention. So most currency pairs are going to be priced out to 4 decimal points, and the pip change is going to be the last, or that fourth decimal point. And so if you think about it, a pip is really equivalent to like 1% of a basis point, or I'm sorry, 1%, or 1/100th of a basis point. So if we're looking at Euro USD, uh, the pip again would be the fourth decimal place. So 1, 2, 3, 4. In this case, the pip would be 4. So if we were talking about a change from 1.08084 or 884 to 1.0894, again, it would be 10 pips, right? So 84 to 94 is 10. So that's 10 pips. Japanese yen is a little bit different. So yen is the second pip, right? Um, so when you look at yen, 1.088 to 1.188 represent 10 pips. So it's actually the second decimal place when you look at yen pairs. I don't know why it's like that. It just is. So again, if you were to look at a difference between 1.0830 to 1.0844, this would be about, I think, 14 pips, if I'm looking at that right. Uh, the same thing with pound. If we had 1.66 to 1.6657, this would be a difference of about 57 pips. Bid and ask spread. So basically, when you look at a forex platform, you're going to have two things. You're going to have the bid and the ask. It's a little bit different than futures, because the futures contract price is going to be baked in to like whatever price you're seeing, and they're just going to take a fee out of that. But forex has a bid and ask. So the bid price is going to be the best available price that the broker is willing to pay to buy the base currency in exchange for the quoted currency to sell the market. The ask price is going to be the price at which your broker will sell the base currency for in exchange for the quoted currency. This means that the ask price is the best available price to purchase from the market. And the majority of the time, the bid is going to be lower than the asking price. And the difference between this is usually going to be spread. I'm rushing through a lot of this again because it is a lot of review, but again, I want to have this video as reference for the like the first day of class. So when it comes to standard lots and units for trading, a standard lot is going to represent 100,000 units of a currency. So you might hear a forex trader say, "Man, I just dropped 20 lots on that trade," right? So one standard lot represents 100,000 units of any currency. If you're using TradingView to trade, sometimes they don't give you the option to um, to even type in one standard lot or two standard lots. They'll a lot of times they'll just say like 100,000 units, and that'll represent whatever currency you're trading. So if I wanted to trade 5 standard lots, then I would need 500,000 units of a currency. A mini lot, you might hear people say this, is a 0.10, and that represents 10,000 units of any currency. So sometimes, again, if you're trading with a broker, they might not say, if you're using the old MetaTrader stuff, which a lot of traders are transitioning away from MetaTrader, you're gonna have the option just to type in a standard lot or a micro lot or a mini lot. It's on TradingView and some platforms and some brokers, they actually make you type in the units. So if you want to type in a mini lot, you'll have to type in 10,000, or a micro lot will have to be 1,000. And so just to kind of give you how much a standard lot is, if you were trading 50 pips, meaning that if you had a price, you hopped in a trade and you had a 50 pip win, you would have $500 with a standard lot, $50 with a mini lot, and then $5 with a micro lot. The cool thing about Forex is that you have leverage in this space. And so It basically what leverage is it allows you to gain exposure to larger amounts of currency without having to pay the full value for it upfront. Basically, what it means in layman's terms, you can trade more with less when it comes to futures or to forex. I'm gonna skip this. And then I really just kind of want to touch on some terms that I'm going to use throughout the entirety of this mentorship. So when it comes to forex, you're going to have a couple of terms. Going long, going short. These are very basic. Again, going long means that you're going to buy it. So you might hear me say I'm long on Euro USD, or I'm short on shorting dollar yen. Long just means you're going to buy the base currency, right? You're selling the quoted currency. Shorting means you're selling the base currency and buying the quoted currency. So I'm shorting Euro USD. I'm selling euros to buy dollars, right? And vice versa. Um, so that's all I have, at least for day one, or week one of this mentorship. Next week, what we're going to be doing is we're going to talk about actually getting into chart work. I just wanted to set the level, like the playing field, as far as, let me stop sharing this. As far as what, the terminology is, some basic overviews. If you've never traded Forex before, then please go back and watch this video. Again, it's going to live on YouTube once this recording is over. But next week, we'll start talking about Power of Three and a little bit about, the price algorithm. We'll talk about that. And those are going to be two major things that we're going to discuss for the rest of the course. So if you're not kind of locked in with that, that's gonna really kind of mess up your platform or like your basis for the rest of the course. So I'll stay on for any questions at all. If you have questions about any of that stuff, if they're more advanced questions, then I probably will kind of talk about them offline. Or if they're more like related to like current pricing or current markets or whatever, if they're not in the context of this class, then I kind of want to keep that for this, since this will be a live recording that goes out. But if you guys have any questions about anything that was talked about today, feel free. I can go back to that and talk about that. So I think this is going to be a really beneficial class, though, and I think a lot of people are going to get a lot of benefit out of it. Um, there's a lot of people that are looking for this kind of knowledge, and they're not really able to find it online, so, or without having to pay thousands and thousands of dollars for something. So hopefully everybody takes advantage of this, because this is going to lead to some of the strategies that I use to make thousands weekly in the market. Um, so I'll stay on for a couple seconds. But this will be the first class. Cool. Chris says thanks for the recap. Appreciate it, Chris. And I'm gonna try and keep each one of these classes to like an hour or less on a Sunday, so it'll be fairly easy stuff. All right, cool. All right, guys, I will see you in the next class. Hope you guys appreciated this, and yeah, go from there. And again, if you do have any questions, feel free to hit me in the Telegram chat. Thanks.